Welcome back to the show. Show's called Your Money, Your Wealth. Joe Anderson here alongside Big Al Clopine. Thanks for tuning in each and every Saturday, 11 to 11:30. Hey, listen, now is the best time to do tax planning. Most of you wait until April. You have to get the tax planning done. This strategy that we're going to talk about has to get done before 12/31, before the end of the year. So come into our office and get a tax strategy in place. 888-994-6257. You can sit down with Big Al. He'll take a look at your overall tax return, your overall situation, and we can come up with some ideas to help you from a tax perspective. Call the number right now. Everyone that calls within the next half hour is in for free. Let's go to the true-false question.
At 70 and a half years of age, the IRS requires that I start taking distributions from my Roth IRA.
That's false, definitely. That's one of the biggest advantages of a Roth IRA, because in a standard IRA or 401k, you're going to have to take required distributions. What does that mean? The IRS wants you to take money out of the account for you to pay their tax. With a Roth IRA, guess what? You don't have to take the money out. That money can parlay tax-free forever. It's tax-free for your life. It's tax-free for your spouse's life, and then even more, it's tax-free for the kid's life. When they came up with this account, the Roth IRA, back in 1997, they wanted to call it the American Dream IRA. But guess what? Senator Roth, he's got an ego, and so he put his name on it. So tax-free is pretty good in my book. What do you think, Al?
It's fantastic.
It's fantastic.
That's the best. And
let's hear it for tax-free.
ROTH, Roth IRA. Anyway, I would say this: if you can create some tax-free income in retirement, this is how you're going to save money. And income taxes are the highest expense for many of you, and particularly those that if you've saved money in your 401k, your IRA, you've saved money outside of retirement. Maybe you have a rental property, maybe you have a business that you're going to sell. If you can create some tax-free income, you can live in a much higher tax bracket than you're actually paying, because some of your income is tax-free. So, Joe, before the break, we talked about contributions, how to contribute to a Roth. Now, we'll get into conversions next, because this is the big one. This is kind of, the contributions is like putting a little teaspoon in. A conversion, you can back up the dump truck and put in as much as possible.
Yeah, put in a ton of money into a Roth IRA with a Roth IRA conversion. It's a big deal. When you take a look at a contribution is $5,500, but what a conversion is now you're taking money from a retirement account, your IRAs, your 401ks, and then you're taking some of those dollars out and then you're converting those into a Roth IRA. For instance, if you take $10,000 out of your retirement account and move that 10 grand into a Roth IRA, yes, you have to pay the tax on the $10,000, but if that $10,000 grows to $20,000, $30,000, $50,000, you pull everything out 100% tax-free. So the conversion strategy plays much more importance in your strategy as you get older, because most of you have all of your money sitting in retirement accounts where you have very little money sitting in Roths. Now it's coming up with the appropriate strategy to make sure that you get that tax-free income.
Right, exactly. And so when you think about it, so the conversion, there are no limits as to how much you can convert. You can convert $10,000, you can convert $100,000, you can convert $1 million if you want to. The only thing is, you got to take a look at what tax bracket you're in. That is what's going to really decide what's appropriate for you. But let's talk about who actually can convert. And this is where it gets kind of exciting. Well, this is anyone that has an IRA or a 401k, any age. I don't care if you're 20 years old or 97 years old. You can do a Roth conversion at any income level, and you can be working or retired, which means anybody that has an IRA or 401k can do a conversion. And I'll tell you this, everybody that has a retirement account should be considering a conversion. You got to take a look at your line 43 on your tax return. That's going to tell you what your taxable income is, and then you can look and see what tax bracket you're in, and then you'll know if you do a conversion how much tax that you'll need to pay.
So let's illustrate this. I'm going to go over to the whiteboard once again and then just try to make sense of all of this tax jargon, because it's important. You want to make sure that you look at a few different things. So now, when you are converting or you're contributing, remember, when you're saving money or investing money, you can invest in different accounts, and each of the accounts are taxed differently. And so you got a couple of different pools of money that you can invest in. All right, you have tax-free money. That's what we've been talking about all day today. Tax-free, Roth IRAs, Roth 401ks. Every dollar that comes out of here, 0% tax. There is no better rate than zero. Here's where all the money is, though. The tax deferred accounts, the IRAs, the 401ks, the SEP plans, the Simples, 403bs, 457s, the TSPs. The list goes on and on and on and on. All of the money is sitting in these accounts, and when you pull money out of here, guess what? You're paying the piper at the highest rates. So to get money up here in this tax-free environment, we looked at a contribution. So if you're looking at a straight IRA contribution, that number is $5,500. Okay, if you're over 50, you can put in another $1,000. Okay, $6,500. If you're married, double that up. So $13,000 if you both over 50. Now, if I have a Roth provision in my 401k, make that $17,500. And if you're over 50, $23,000. Okay, so now I can put in $23,000 into the Roth 401k plus $6,500 into a Roth IRA. Now you're really jump-starting your tax-free growth here. Here's a very important key. Now, with all of the money that you have sitting here, here's a technique that you can start taking money and moving it up into the tax-free arena. That is called a Roth IRA conversion. You have until December 31st to do this. So do it now. Don't wait, because you have to get it done in the calendar year. So if I want to take money out of the retirement account, I can now move it up here. It's called a Roth IRA conversion, but here's the downside. I have to pay the tax. But you're never not going to pay the tax. I'm a very simple person. I'm from Minnesota. There's a lot of farms in Minnesota. Think about it this way. Would you rather pay tax on the seed or on the harvest? Right? Of course you would rather pay tax on the seed, right? And then the harvest blows up and builds this nice big nest egg, and every single dollar comes out of their tax free. Now, if the best part about this, here's the tricky thing, is that I have to do the conversion before the end of the year. Okay, but you pay taxes on it next year when you do your taxes in April. Okay, so now the IRS allows you to recharacterize. So any dollar that you move up here into a Roth IRA, you have to get that done before 12/31, but you can always put it back. You can say, you know what, never mind. I don't want to do it. I don't want to pay the tax. Maybe I lost money in the account. Maybe I got a bonus at the year end where it pushed me up into a higher tax bracket. This is key. This is the best part about it. You can always undo it. If you go to Vegas and put everything on black and you spin the wheel and it turns up red, you can say, nope, I'm just kidding. Give me my money back. It's the same concept. Every dollar that I put up here, I can put right back. No harm, no foul. It's a redo. It's an undo. So you have until next year to worry about it. You have to get it done before 12/31. So I encourage everyone that is watching this program to call their CPA, to call their advisor, to say, hey, does this make sense? What are some of the strategies that I should be looking at? If you've never heard of this before, I would encourage you to find different professionals that know this stuff. If you want to call our office, Al and I will be happy to sit down with you, or any other defined professionals at Peer Financial Advisors, to do a tax review. What strategies are you doing before year end? Here's the number, 888-994-6257. That's 888-994-6257. Now, when we get back from the break, I'm going to spend a couple more minutes on this whiteboard, because then I want to talk about a strategy that you can utilize the time value of money and also the IRS recharacterization rules. It's pretty cool. Don't go anywhere. The show's called Your Money and It's Your Wealth.